Taiwan index is down 0.5%. We're seeing Hang Seng that's down 0.4%.
They want to cut their tariffs way down now.
Possibly have an agreement which would be in the benefit of both countries.
We've already underperformed, so it gives us a better case to outperform from here on.
This has led to negative reaction on stock prices.
It's just about 16 points down, 19, 20, 30 points down now.
Tariffs on, let's say, China. So then India becomes the dumping ground.
Company needs to outreach to shareholders, outreach to proxy advisory firms and tribes.
Caps and small caps, after last week's one-way up move, have paused a bit.
PK Arora, as per our sources, will take over the chair of IDBI chairperson.
The government, however, has its eyes set on wrapping up the budget process smoothly.
Broader markets, though, that are a bit of a pain point, as Reema was just mentioning, a 300-point cut.
Good afternoon, hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay, with me as always Nigel D'Souza, and we have Mangalam in the house here. And unfortunately, we don't have very positive news to report, because what was looking like an okay kind of a day up until 12 o'clock, then flattening out, now is sort of falling into a different pattern altogether. Nifty is down 0.5%, but look at the sharp slide in the mid-cap index. We'll talk about it as we go forward. Guys, good afternoon.
Well, good afternoon. I think the problem in the last half hour or so is that the Dow futures have moved lower.
Yep.
So that's sitting with a sharp cut. And the other problem is, if you pull up the dollar index, that's showing some strength, and the Indian rupee is at the low point of the day. So I think those are a couple of factors that are playing out, and explains why the Nifty has now seen a sharp downtake. I don't think it's yet a cause of worry, because, maybe the street is bracing for a weak US trading session. In the past, we've seen that. The next day it comes and realigns itself. But the problem is the dollar index, that's seen a sharp drop. So I think pull up the Indian rupee, actually, the intraday chart. You'll see now the rupee is at the low point of the day. So we'll have to wait to see what the flows picture looks like.
Well, there were signs of, some sort of decline towards the end of trade today from the start of trade itself. Even as the Nifty was trying to move higher, we had the broader markets which are not doing particularly well. The Nifty Bank wasn't supportive enough. The Nifty was led only by a couple of, FMCG names, and you had, some of these IT names which had been battered down already. And add to all of that, even as the market, the Nifty was holding on mildly in the green, we had the India VIX, which was higher as well, which indicated that there could be some sort of put buying that would be taking place in the market itself, and as a result of which now we are seeing a bit of a decline. The broader markets, were weak all through today's trading session. What's interesting right now, as we look at the market breadth, the red and green lines are at the biggest distance that they are with regard to each other right now. Nearly 2,161 stocks, which are in the red, as against 550 stocks, which are in the green itself. Some of the notable losers in just the last few minutes. We have the IT pack. We were speaking about how the IT pack was supporting the index in the first half of trade, given the up move that we saw in Infosys. Look at the IT index. That's moved to the low point of trade as well. And this, with the rupee moving to the low point of today, usually you see some support coming in from IT, but that's not the case to be.
Yeah, because it's a much wider sell-off once again. That it's a global sort of situation. It's not just us, not this time at least. I know in the last many weeks and months, it's been our market falling singularly while others have marched on. Today is not that kind of a day. European markets have turned around as well. There's a bit of a cut on the DAX, the FTSE and the CAC. The bigger issue is the US sell-off, which started just about half an hour, 40 minutes ago, and bang in step with that, our markets also turned. Now, if you look at futures, they're down about 1% on the headline indices now, the Dow, the Nasdaq and the S&P 500. Is there a new development? Not really. It just seems to be nerves. Now, yesterday, this is, Sunday morning US time, the US president gave an interview to Fox News, and he was asked that question by Maria Bartiromo, whether, the US indeed will look at a recession because of these aggressive tariff policies. He didn't outright deny it as a possibility. He said, I shouldn't be predicting these things. But he didn't issue a clear denial. Well, perhaps that's feeding into the level of uncertainty. Market looking at this as an excuse to sell off. Remember, the US hasn't had a real meaningful correction in the longest time ever. So it seems that there's some money going off the table. And it's a risk-off not just in equities, it's also a risk-off in bonds. There's a lot of money shifting to bonds. Look at the US 10-year yield. Very quickly, it was around 4.3% towards the end of last week. Now we're talking about 4.24, 4.25. So those are the kind of levels that we're tracking. One last point on China. These tariff issues are becoming real. They're far more closer to home. They're real for a lot of different countries. Look at what's happened in China. First is disinflation. The number that came in was minus 0.7%. That's an economic concern. Second, over the weekend, China has levied reciprocal tariffs on Canada. Some Canadian imports, agricultural imports. The short point is that all this tariff business is real. Those tariff numbers are becoming real. And eventually that might find its way into, of course, inflation, corporate earnings, so on and so forth. And that reality perhaps is getting priced in. So I started the day thinking whether we'll take aim at the 20 DMA. That's a long call now. I mean, we're way off that trajectory, at least for now.
You know, and we're at a very, very crucial mark, particularly on the Nifty Bank, because we're at around this 48,200, 48,150 to around 48,200. And last week itself, we did see some buying coming in at these levels. The next level of support obviously comes in at around that 47,500 to 47,800, which is the recent low. But this is a crucial mark, and Reliance Industries needs to come up with the 20 DMA, because that's still holding above the 20 DMA. And remember, once it got past that, we did see a good move in Friday's trading session as well. It's seen some profit taken from the top. And as Mangla mentioned earlier as well, the tech index. So no real place to hide on the Nifty itself, because you have Reliance that's down, the banks as well are down with a cut of more than 200 points, and the tech index has moved to the low point of the day. So no real place to hide out there.
You spoke about Reliance, the other heavyweight. The sharp fall that we've seen on Nifty Bank, that's courtesy HDFC Bank. Just pull up the intraday chart of HDFC Bank. This afternoon, again, it was making attempts to move higher. Reliance is at the low point of trade, but HDFC Bank was higher. Just about 20 minutes ago, it was at the high point of trade. And from there itself, it has seen one big decline. I'll be very interested to see whether this, 22,500 mark holds out for the Nifty or not. Because from lower levels, today itself, from the start of the show, we've seen about 30-40 points in terms of recovery. That's largely because a lot of put writers were active at 22,600 for a premium of 100 rupees. So if they are, positioning themselves for some support on the market, the level that they're looking at is around 22,500. If we stay below 22,500 for a fair amount of time, then maybe we would see a bigger decline. And that's what the premiums out there are suggesting as well. But be that as it may, let's go across to Mitesh, who joins in with how one should position themselves at the last hour of trade. Mitesh, good afternoon.
Good afternoon, Mangla. So I think, the Nifty, which is trying to bounce back, has slipped below 22,450. Just trading around those levels. In case we see a break, then I think you might see some kind of a halt coming into the pullback rally, and we might go back to this range of 22,300, 320 to about 22,600. Below 22,300, I think I'm afraid that we'll even look at the declining move restarting again. But as of now, I'm not very sure of that. So just holding my horses over there. These are the level to watch on the Nifty. On the downside, 22,300, 320, I think is very critical. In the short term, these are spot levels. But the first pivot is 22,450. So let's hope that the first pivot itself holds. But that is something which we'll know possibly by today, tomorrow. So with that kind of view, I think, we would advise people to wait to jump onto the index positions. Stock specific, yes, you can trade. But I think on the index side, I would still want to wait it out and see how the market reacts. On the stock side, Power Grid is a buy for me with a stop at 266 for targets of around 280. And the other stock which I would want to buy is Reliance on a mildly lower level. See, it's given a very strong rally in the last 3 days. In a few hours, we've seen some kind of pullback playing out. So I think Reliance might drop down to about levels of 1230, 1225. That's the buying zone. Keep a stop at 1205 and look for target of 1270.
Mitesh, just a follow-up. I think we have some inputs coming in as well.
On IDBI Bank, I think we have
privatization to be finalized this month. Share purchase agreement for IDBI Bank. It seems to be rolling ahead. I mean, we'll get the stock up on the screen as well. It's something that's been in the works for the longest time. And it seems that now there is some forward movement on this. And by the end of the month, that's March, end of the fiscal end of the month, we perhaps will have a more formal agreement in place for additional privatization. So that's what we're looking at, IDBI Bank. But Mitesh, I just wanted to, quickly ask you about some of the mid caps which are falling very, very sharply. Because, I mean, I don't know if people had initiated long trades here in any of these counters, but if you look at something like a 361 Wealth Management today, it's down about 6%. JM Financial, a couple of the market-related stocks are falling a lot today. What would your advice be? I mean, is there any trade at all? Or if you had opened a long trade, if you were being very brave over last week, is it time to close those long trades, particularly on the capital market stocks?
Yeah, again, that's a separate segment altogether. And, 361 is something which I'm not tracking regularly. But JM Financial is something which I've tracked. And I think the stock, recently made a low of around 89 on a 90 half on a closing basis and around 87 on an intraday basis. So I think we are back to those levels. I would hope that these levels, kind of hold and we get a reversal from here. Still not sure of that, but assuming that 87 and 90 zone is holding out, then this is the time to buy with a stop below 86 half. The first target is around 98, 99, but good chance that because it's so oversold, if it reverses, we might even get 106, 107. So the risk reward is good. But given the fact that I'm not very keen on the index, I think I would suggest if traders want to venture, take it with a smaller quantity than normally.
Okay. All right. Got it, Mitesh. Thanks very much. We'll come back to you in a bit for some more advice. Right now, let's put the spotlight on HPCL. Actually, some of these stocks relating to the crude play, where the fall in crude prices is still beneficial. Nigel in the morning was talking about HP, BP, IOC. There was some mild green on the refiners earlier as well, but it's all turned very, very quickly. HPCL is right now down 2%. But on HP, we're also looking out for another development. Apart from the oil bit, there's a corporate development. The company has appointed a chairman and managing director. Sudarshan is here with more details. That would be a new CMD. Obviously, HPCL always had a CMD. But what is the latest, Sudarshan?
So apart from the crude fall that we have mentioned, HPCL has got new chairman and managing director in the form of Vikash Kaushal, and he's appointed CMD for next 5 years. Remember, it's the first time that a private sector executive has been appointed to head an oil and gas stock. Basically, it will be the first time that any private sector executive would be heading an oil and gas PSU. And he comes with a very healthy global experience. He had previously served as the global leader for energy and process industries at Kearney. And he also has more than 3 decades of experience in energy, oil and gas and power sector. He's a chemical engineering graduate from Punjab University and MBA from IIM Ahmedabad. He was twice elected to Kearney's global board of directors and also served as managing director and country head for Kearney, India for 5 years. Now, talking about his contribution to the oil and gas sector especially, first, he has been an advisor and consultant to global Indian companies including IOC, HPCL, BPCL and GAIL. For IOC, he had spearheaded setting up its petchem and gas divisions. He also led a refinery maintenance transformation program and spearheaded its Dhruva retail transformation and cost transformation of lubes business. For HPCL, he established centralized procurement office and driven energy and savings, and also spearheaded petchem diversification strategy and implementation support. For BPCL, he had led net zero planning and petchem strategy. Apart from oil and gas, if you look at his contribution to thermal power and renewable energy, he had led corporate plan implementation for NTPC. Second, he implemented reliability-centered maintenance for Tata Power, and he designed and executed commercial and industrial power sales business for a global company. So he comes with a very healthy global experience. We'll have to see what all changes he brings for HPCL.
Take that point, Sudarshan. Thank you so much for joining in and giving us the street cred of the new MD and CEO at HPCL itself, Vikash Kaushal. Let's welcome Dipan Mehta, who joins in on the show as well from Elixir Equities. Dipan, your views on the oil marketing companies itself and HPCL. You've heard about the new leadership, but this pack on the whole, oil seems to be contained now, and at the same time, we don't have elections in the very near future. So maybe there could be some case for price increases, if at all there are any, or reduction in losses for these oil marketing companies as well. Do you like these as a pack right now?
Yeah, good afternoon, Mangalam, and thank you for having me on your show. First, a disclosure, in our PMS scheme, we have invested in HPCL. And I think that there's a super trading rally in oil marketing companies, and the losses, of course, will be curtailed. And that in itself should result in a very good alpha when it comes to their earnings per share, and valuations look really, really attractive. And I think in the, with the way things are going in the global markets with Trump and his entire drill, baby, drill, kind of a slogan or mantra, we can expect tepid oil prices for an extended period of time. And that certainly will improve the profit profile of all oil marketing companies. So very positive on the entire pack. And I think normally I've been very, very negative on commodity companies, oil marketing companies, because of various reasons, government interference being one of them, inability to raise prices being second. But I think the next 3 to 6 quarters looks very good for these oil marketing companies. And you could see earnings growth, and maybe even the market may give it a higher valuation.
All right. Hi, Dipan. Good afternoon and good to see you in. Dipan, I wanted to ask you about IDBI Bank. You know, Sapna is bringing in news that there could possibly be a deal in the works and there could be some agreement that will be announced as soon as in the month itself. And because of that, you know, the stock that was trading in the red, it's suddenly seen a big U-turn. Your view on IDBI Bank, if I'm not mistaken, I think I've seen the stock at 90, 100 rupees as well, at around the 71, 72 rupees. Are you interested?
See, I think that first of all, IDBI Bank has shaped up pretty well after all the issues it got into. It has cleaned up its balance sheet, capital adequacy ratio also has come up, and now its NPA ratios are more or less in line or better than industry averages. We have seen decent growth in the balance sheet size as well. So as a functioning bank, it has done very well. I don't think that change of ownership may do that much for the bank, but you know, if there's an open offer, that may cause a trigger in the stock price. But nonetheless, I think I'm at least not, if I'm an existing investor of IDBI Bank, I'm not looking at exiting in this correction. And maybe around these levels, if you are underweight the banking sector, which I think, you know, will do very well over the next 3 to 6 months or so, then certainly IDBI Bank is a stock to consider if underweight banks per se.
Okay, all right. Dipan, I wanted to understand your view on Jubilant Food as well. Mangalam is with us. Mangalam, tell us more. Jeffries has written a note as well out there. There are some concerns with regard to the stock, but I think Jeffries is still bullish. Tell us more.
Jeffries is still bullish. You know, we've been talking about the quick service restaurant space as well. So Jubilant Foodworks recently held an analyst meet. It's maiden analyst meet where it gave out targets for growth, etc. The analysts are concerned about consumption slowdown. They're concerned about lower margin expansion, and they are concerned about group level debt at the company after the Jubilant Bhartiya Group has gone ahead and acquired Coca-Cola's India bottling partner, Hindustan Coca-Cola Beverages itself. But remember, this has nothing to do with the listed Jubilant Foodworks company. It is at the group level itself. So they've found out from their own channel checks, etc., and their own analysis, they said that concerns around consumption slowdown may not be as strong, largely because of the steps that Jubilant Foodworks itself has taken, and the third quarter momentum where they had about double-digit like-for-like growth is likely to continue in coming quarters, and that's not an aberration. On margins, the management has guided for 200 basis points margin improvement, but that perhaps is on the consolidated basis. On a standalone basis, it could be a lot higher. Jeffries believes that their guidance is a little conservative, and the management has guided for 200 basis points over FY24 margins. If you look at FY25, then the actual expansion would be 250 basis points. So that's a positive as well. And if they're going for growth already, Jeffries says that profitability will follow growth anyway. And finally, on the group level debt due to HCCB acquisition, they understand that the debt because of this acquisition could be close to around 5,500 crores. And the group market cap, not just Jubilant Foodworks, you have the other Jubilant companies as well, which are listed, is close to around 36,000 crores. So that provides an 8x cover versus the debt which is there as well. So all factors considered, it's actually not as bad as what everyone else is concerned about. And the growth path that the company is on may have it in good stead, and as a result of which their buyers on the stock, they have a target of 1,000 rupees.
Okay, all right. Dipan, what do you think? You're interested? You're up for a pizza?
No, let's stick to health food this time.
Okay. What about the stock then?
I would avoid even Jubilant Foodworks also. Look, it's crazy valuation, 100 plus, as always said at these levels. But 10-year sales growth has been 8 to 10% or thereabout, 8-9% or so. And now they've gone and acquired DP Eurasia also, which is that Turkey and I think Central Asia franchise for Domino's. And I think that's what's driven the profitability in recent times. But we can't pay a very high P multiple for that acquisition. So on the whole, when I'm looking at the entire consumption space and I really like that investment theme, I'm not that optimistic on QSR. I think there are better plays within the consumption theme for investors to track and trade and invest in, and not necessarily Jubilant Foodworks or the other listed QSR companies. Just valuation is just too daunting.
What would those other consumption pockets be then?
See, I think that, we've spoken about hotels. I think I saw on your channel itself. Hotel means hospitality, including aviation, looks very good. I think specialized retailers also, I think after 2-3 years of very disappointing performance, they may come in the limelight, like, Go Fashions or even Vedant Fashion. And there are other metro brands, Ethos Watch. I think these are companies which are in a specific category. They have a decent retail network, strong brand, clean balance sheets. Just last 2-3 years, because of slowdown in urban consumption, their performance has been affected. But now going forward, I think certainly things may improve for them, and valuation now are at reasonable levels. So that is in the consumption space. That looks quite interesting. And then there's, of course, the hospitals and the diagnostic companies, which are kind of evergreen consumption-oriented stocks.
You know, you're talking consumption and you mentioned specialized retailers. So, Deepan, I have to ask you about Trent, right? Because it's been an amazing story. The rise was absolutely stunning and shocking, and so has the fall been. Equally stunning and shocking, right? 40% off the peak. Now, I don't know. I mean, there are some who are writing almost, writing it off, preparing a text for the tombstone, etc. There was a note from Kotak today saying expect sales to flat out, etc. Their target price, I think, is about 5,100 stocks, anywhere below that. So, is this some sort of a buying opportunity? Because you say you buy great businesses when the going is tough, class is permanent and form is temporary, all of that. The other theory is that every bull market is a new leader. I mean, stocks come and go, and some outlive their shine, or some lose their shine. So, which category is Trent in?
So, good afternoon. First of all, I wouldn't rate Trent as a specialized or a specialty retail company, because they cater to many brands, rather many categories. They're not like any of the other companies I listed just now. And to answer your question, which is a very difficult one, by the way, is a bit of a quandary, because it's such a huge wealth creator, but it's still expensive, and the growth is slowing down. So what do? It's a big question mark. I mean, we are investors in Trent for last several years, and even after this correction, we want to remain invested. But I think there is growing concern around the valuations. I wouldn't make a fresh bet on Trent at these levels. See, existing investors who are sitting on profits, for them it is an easy decision to remain invested or not. But for a new investment perspective, there are so many choices, and you don't want to get into a company which you realize in a few quarters down the line, the stock prices remain flat despite growth in earnings, just because the P multiple has compressed. So new investment, avoid. Existing investors, wait and watch, but be a bit cautious and maybe ready to exit if there's any bad news, if at all, from the company.
Just a word on Trent. The stock has now fallen 40% from its highs. At peak, it was trading at around 120 times. Now it's trading at around 70, 75 times. That is, assuming that all the growth path that all the analysts are, factoring in stay intact. The only larger theme in Trent, as per me, is that, everyone was talking about the massive rise in Zudio. At that point in time, it was a concept which worked extremely well.
And it was growing at what? Around 40%,
at around 45-50%. EPS
quarter,
growing
right?
at around 80% as well. And the one thing that I'm sure even Nigel would agree with, that nothing disappoints the street more than growth than EPS. Massive deratings happen not when the company disappoints on earnings, but when it disappoints on growth. So ever since it disappointed on growth a couple of quarters ago, since then the multiple derating started. And then at the same time, you had a couple of other things that happened as well. Zudio was suddenly not the only game in town when it came to value fashion retailing. Because you had Reliance, which launched Ustar. I was looking at, Shoppers Stop, which launched Intune. Aditya Birla Group itself launched Style Up. And CRM Silk, of everyone, launched something known as Z Code. So you had all of that, with Reliance having a tie-up with Shein as well. Add to this, you already have the competition coming in from V-Mart, Vishal, V2, and all these other retail companies. And the street was hoping that, okay, Zudio's growth is now petering out. How about, the other formats that the company has? They have Star Bazaar, they have Utsa, they have Samo, which is the ethnic brand. All of them aren't growing as fast as Zudio was. So now you had one engine, which was the speed driver. You have that is slowing down, and the others aren't firing up enough. So maybe as a result of which, we're seeing the stock, underperform.
It's absolutely stunning, because I don't remember a nifty stock. I mean, we see that with mid-caps, right? Mid-caps, the valuation doubles, 2x, 3x, 4x, and then they fall equally sharp. But for a nifty stock, it's been the rise was dramatic, and the fall has also been, well, dramatic to say the least.
Well, that's right. Sometimes that the nifty curse, right? Get it? You do so well, get into the nifty.
And that's it.
And then after that happened with Britannia. Now Britannia is on its way out of the nifty. In any case, be that as it may, we'll talk about the markets and a lot more after this short break. But as we do that, here's a quick note for our viewers. What does it take to move the needle on gender parity? That's the big question, right? The biggest names in the business, policy and leadership come together for the mega summit for HSBC presents CNBC-TV18 Future Female Forward, co-presented by Cognizant, to answer that very question. Tune in live on CNBC-TV18 today at 5:30 p.m. We bring you insights from those shaping the future. Well, market continues to do market things, down about 90 points for the frontline index. The pain is a lot more in the broader markets, down 1.5% in today's trading session. The Adani Group stocks, which were doing very well in the first half of trade, have now come in for a bit of selling. So we have Adani Enterprises, which is at the low point of trade. You know, in the broader market, some of these Adani names currently seeing a wee bit of selling. So just keep an eye out on all of this as we focus on oil marketing companies. They're in focus as the second supplementary demand for grants show no provision for LPG compensation. What does this imply for their financial future? We have Sudarshan joining us with telling us more. Sudarshan, you told us about the new MD at HPCL, but tell us about this one.
So today, Finance Minister has submitted demand for second supplementary, and in which there is no provision for LPG compensation. Remember, Oil Ministry had sought for LPG compensation of rupees 35,000 crore for financial year 2024-25, and till 9 months of FY25, if you add LPG under recoveries of all three OMC, IOC, HPCL and BPCL, total LPG under recoveries were worth rupees 29,223 crore, with IOCs 14,300 crore, HPCLs almost rupees 7,600 crore, and BPCLs almost rupees 7,300 crore. And these under recoveries had surged almost 67% in Q3 from H1 of FY25. So there was an expectation that if it was not announced in the budget, it might come in the second supplementary demand when FM presents. But as of now, there is no provision for LPG compensation even in the second supplementary demand.
So Darshan, weren't they going to set up a fund? I mean, I'm sorry to throw this at you, but I think that was more for the new fiscal. I mean, that was something
that is for FY26.
Discussed. FY26, which they'll do it through a reserve fund. But the question is, for the year that's closing out, who's going to foot the bill given these losses? Got it. Thanks. That's an important development. And we'll discuss this space with our next guest in just a bit. Thank you for that. Let's now talk about the privatization of IDBI Bank. As you just saw on the ticker a while back, the process seems to be moving forward, and maybe it will be completed perhaps in the next couple of months itself. Sapna is joining in with the latest. Sapna, what are you picking up?
Well, just exactly as we have indicated, as we have learned that most likely the share purchase agreement for the IDBI stake sale, rather privatization, is going to be signed this month. So that's an important milestone. Post that, the government would be in a position shortly to invite financial bids. And once that's done, the indication is that latest by H1 of FY26, that is basically between April, September, which is quite a longish timeline that we're talking about, the actual transaction will be done. It could also be possible that if things move fast, then maybe the first quarter of the new financial year, that itself will see a lot of traction. I think around a month and a half, 2 months, all will be given for the financial bids to come in, and post that, the transaction is likely to close quickly. This is a very clear indication from the government, and they should be taken on board.
All right. Okay, Sapna, thank you very much for that. Appreciate you joining in with the latest inputs on IDBI Bank. Thank you very much for that. Let's move on and welcome in our next guest. Vikas Khemani, founder of Carnelian Asset Management, is with us now to give us a sense on the market, the approach, and what you should be doing given the volatility that we've seen. Vikas, pleasure having you on. Thank you so much for joining in. You know, just when everybody was heaving a sigh of relief, saying, okay, there's some green, 1 week acha gaya hai, 3% recovery from the lows, today is another volatile day, right? It's that kind of a market. But I want to start with a question on some of the exposures that you have. If you look at the shift strategy, then there's a large exposure to pharma, chemicals, API. You know, this is almost 30% of your portfolio, if not more. Now, what are these companies telling you, the companies that you sort of engage with respect to all this tariff confusion and whether, it's going to be more expensive to ship things over to the US and what's happening with China, whether China will then, since they have tariffs from the US, they will dump in India. It's too many changes going on for a lot of these companies that have that are part of global supply chains. What's the sense?
Currently, right now, they're in an uncertain environment. And, like everybody else, I'm sure these companies also don't know anything. So everybody is in a right now guessing mode. And that's where the sense of uncertainty starts. But I think the fact of the matter is that today, no matter what America wants, other than leaving tariff, they can't start manufacturing themselves everything back home, right? So just leaving tariff is not an answer. So I'm sure right now, whatever is going on, there's a lot of rhetoric and there's a little bit of reality. And at the end of it, after making so much noise, somewhere I think in next couple of months it will settle down. If it was so easy, then I think Trump should have announced on that day one or first week, tariff on all the partners, because he should have been clear about his policy. The fact is that, they also know that it's not an easy process. And if you are going to around tariff across all the countries in the world, including India, then how does it serve the purpose? So point is that it also will become inflationary in US. So I think I'm sure, and this kind of statements and uncertain environment has created a bit of a point of worry for everybody, including, Indian companies and investors, rightfully so. So I think I'm sure, in my opinion, the long-term structural drivers of the growth for all these spaces are still intact. There could be this kind of uncertain period which will be there. We will navigate as it comes. I'm quite, I think I'm, more sure that it's not going to derail the entire India story, China plus one story, India manufacturing story. All of them are in place. A little bit of adjustment might happen based on the detail which comes out, which none of us know right now. So we'll see. We'll take it as and when it comes.
All right. Hi, Vikas. Good afternoon and good to see you. When markets aside, how are you feeling about the big win last night? You were in Dubai for one of the games and thrilling, right? Markets,
absolutely,
a little bit jittery, but I'm sure you're feeling quite good about the win last night. Were you there?
Absolutely. No, I think every Indian is cheering, and it was after whatever happened in the World Cup. I think this was some sort of consolation. But it was
some respite.
Really well. Yeah. Team really played well, so enjoyed every bit of it.
All right, Vikas. Then let's get back to the markets from for someone who's been invested in the markets for so long. The big money is made actually when the markets are brittle, when the markets are a little bit jittery. When it's a one-way direction, then you don't make the big money because you can't get in time. But now you may get a phase where there'll be a good amount of time to buy stocks at a sharp correction. How are you feeling about the markets right now? The consensus is the headline index maybe could make a near-term bottom, maybe 4-5% lower even from here. But what about the broader markets? How are you feeling out there? What is the allocation strategy in the broader markets in particular? Because that's where fear has gripped a lot of investors.
I think, as you rightly said, there's a lot of fear. And this current environment reminds me of pretty much similar environment in some sense in Jan-Feb of 22. If you remembered, Mark, we had a great 2021. Second half of 2020 was great. But the Ukraine war started and Nifty, which was there at 18,500, corrected during that phase of 3-4 months to 15,500. Geopolitical concern, inflation, all of them were everybody's mind. And, some people were even calling out World War III and stuff like that. And I think a lot of fear was there. And as we saw that, 15,500 became a base after 20% correction. And we had great second half of 22 and 23 and first half of 24. So what I'm saying is that these kind of corrections are par for course in every 2-3 years. Current market also, if you see, we had a great 23 and 24. Markets have corrected from 18,500 to 26,500 to almost 22,000. And a lot of froth has got sort of corrected. So I see that it's right now lots of those concerns are kind of played out. You might see some more specific froth in some segments, but that is only cleansing of process in the market over the next couple of months. I think this is a good base for market from long-term perspective. I think this vintage will quite sort of be fruitful, just like how the first half of 22 was. I think last year RBI had sort of squeezed out liquidity in order to defend rupee, and that had created impact on the corporate earnings and economic slowdown in with 2 quarters lag. We have seen RBI has pivoted significantly towards growth with the liquidity and interest rates cut and the entire commentary with government's focus. I do believe that we'll start seeing impact on the economic recovery and corporate earnings with 2 quarters lag. So my sense is that we will kind of form a nice consolidation in next couple of months, and from there you might start seeing good recovery coming through.
All right, you might see good recovery coming through. Nigel, you spoke about him being present at one of the games. Yeah. I happened to, meet him out there as well. And the man was very bullish, not on the Indian cricket team, but India as a country. And he was just waving his flag extremely hard. Vikas, so good on you. We got the championship. We got, some recovery last week from the fall as well. But my question is with regards to what happened in, not just the markets, but the infra space itself. Yeah, you have the visuals of the Champions Trophy playing out, 11 wonderful, champions who've gotten their hands on the trophy. But let's get back to the markets. Vikas, L&T is, one of those stocks you were backing. At the same time, you were backing a lot of these, infra names as well. You did speak about how construction and all that's happening in Mumbai right now is very temporary. The pace at which it's being executed will complete, and we'll actually go back to fast-paced growth in the city itself. So are there any other, themes that you're backing right now in the city infra sort of space?
The infrastructure is a good theme. There's no question on that. In India is building infrastructure, railroad, railways, port. Everything I think is being built at a very rapid pace. Last year, like I said, because of the government, election mode, incremental orders kind of slowed down, and supply, sort of payment release, I think slowed down, which in my opinion will start reversing. And companies like L&T and many more of them are, kind of beneficiary of that. So I continue to remain optimistic and positive about the entire, sort of construction players, especially, leading companies like L&T, which has been a great wealth creator over the last 4 or 5 years. So, yeah, I mean, other than that, I think, in this year, I believe that banking could be an interesting space to look at because of the pivot of the policy by RBI and the government, where I think, you could see interesting sort of growth coming through in the segment, and stocks have corrected. Last year was underperformer. This year has been so far all right. So I sense that this year, banking as a sector could outperform and could do well. Companies have kind of come into very reasonably good risk reward of valuation as well.
Because I wanted to ask you about the cables and wires space. I recall, if I remember correctly, that you all bought KEI, I think it's 100 crores, if I'm not mistaken, a few 100 crores, if I remember correctly. And you all held it all the way, it was a multi-bagger. Now there's a new player that's getting into this space. What is your analysis of it? Some of these stocks have fallen more than 30% from the top. KEI as well. It's down close to 25-30% approximately. Your view on a new player coming in there? There appears there is ample opportunity because there's an unorganized player, section of around 25%, and there's an export opportunity as well. But how would you approach this theme, particularly since a couple of these companies have been multi-baggers for you?
It was, in my opinion, it was overreaction. So when the Asian paint, when the Grasim announced the paint segment, I think market didn't give much impression, didn't pay much attention, and kept on ignoring. And with a 3-4 years, 5 years lag, when they actually came to the market, they made some impact because it was a kind of two-player market, right? And it's a domestic market. But I think cable, if you ask me, still their capacity is at least 2-3 years away. It's growing very, very fast. And I think within there is a segment of cable and wire. Cable is again a very, very different business. I think they are getting into only in wire. Cable requires very long periods of certification and all those things. So in my opinion, it's quite some time away, and markets are anyway growing at a rapid pace of 12 to 14%. So in my opinion, nothing major to worry to have this kind of reaction. Of course, every time there's a new player comes, one has to watch out, one has to see what could be the implications. But I think it is still, they've just announced they will do capex, they will, come to the market. By then, I think lots of dynamics can sort of change. So we'll see how it goes. But I at a prima facie, I think it's an overreaction.
Okay, so then a two-part question, Vikas. One, will you buy? And the second part is, what else are you liking in this space? What new themes are emerging after this big correction?
So like I said, I think in this, we've been, one is that, banking is something what we've been liking in this space, in this current fall, looks pretty interesting. Within manufacturing, I think a lot of, pharma companies, CDMO companies have come down. Chemical companies have come down. They look very, very interesting. In my opinion, you have very, very interesting ideas where stocks have corrected 30, 40, 50%. Of course, I'm not talking about some of the froth where still some amount of correction can happen, likes of, railways and some bit of pockets of defense and some bit of, but the rest of the pack, I think, you are looking at interesting ideas. In fact, within auto component space, there are some reasonably good ideas. So I think nothing new per se to say that, because ultimately India's story is in about 4 or 5 buckets, and you have to keep looking ideas in those 4 or 5 buckets. So no structural change per se, but yeah, good value, relative value shift one can kind of play out.
Right, Vikas, always good to hear your thoughts. Bullish on Indian cricket team, bullish on the markets as well, and believes there are plenty of ideas out there. Big money is made when the markets are weak. This could be similar to the start of 2022 when the markets pull back, and from there on, we continued our big run. Thanks a lot, Vikas, for joining in. But it's that part of the day when Nimesh joins us to tell us what he's picking up on D-Street Chatter. Well, Nimesh, it looked all good till the last 90 minutes or so, and suddenly that profit taking came back in. How are you reading it, and what are the flow picture?
Well, Nigel, when markets start paralleling to that India has won the cricket match, so markets should do well. I guess that's where there is an overconfidence. So I guess today, I think everybody went with a bit of overconfidence, and again, the fact is that the mid-cap index is corrected 1%, but to put into context, the index rallied 5% last week. So a decent pullback was seen, and now we're seeing a bit of profit booking there. But in terms of flows, it's quite mixed. So I wouldn't say there is a large selling from any leg, either it's an FI or a DI, which is a very large seller. So kind of a mixed day in terms of flows, but you might see that bit of pain in the broader markets in run up to this next 10-12 days because of the yearly closure and also maybe that might have an impact, but otherwise there is not much to read into in today's fall. It's pretty much mixed is what I understand from a flow perspective. Within sectors there is a bit of churn happening as well. So selective banks are under pressure today, so is technology names. On the other side, there is a bit of buying back into the consumption stock. So there's a bit of shift there. Even within the PSUs, while all the stocks are down today, my sense is there is a bit of buying happening in the PSU basket as well from larger institutions. So it's not a very bad day as far as flows are concerned. Watch out for 21,800 on the downside. That's a very strong support now. But I guess you might see a bit of a range-bound trade between 21,800 and 22,200, 400 type. So that's a broad level to watch out for. But nevertheless, there's no big panic selling is what I understand from larger institutions today.
All right. So what about individual stocks? And I'm sure you have a lot of tidbits there.
Yes, Maglam. So a couple of stocks, while the stocks are under down today, first is CG Power and Bharat Forge. Both are under pressure today. But I guess the street is anticipating some large order wins for both the companies very soon. So something to track in both CG Power as well as in Bharat Forge. The second is JSW Energy. Within a weak market, that's buzzing in trade. Good volumes as well. I understand the volumes have picked up across the power sector stocks, and JSW Energy stands out. So expect high delivery volumes, but on the buy side in JSW Energy today. So that's the second name. The third stock, again, a couple of stocks where this delivery-based selling. IRB Infra and Senco Gold. While IRB Infra reported good monthly data, still the stock is under pressure, large on the back of sell flows. And similar is the trend with Senco Gold as well. So again, selling has resumed in some of those mid-cap stocks. And the last is Supreme Industries. Under pressure today. In fact, for the last couple of weeks, the stock has been under pressure of late. But small buying has emerged is what I understand. And also for Supreme Industries, there is a very strong indication that watch out for a corporate development in Supreme Industries very soon.
Okay, all right. Thanks a lot, Nimesh, for joining in and giving us that quick update. Well, let's slip in a short break. As we do that, a small programming note for our viewers. CNBC-TV18 and HSBC India are back with session 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for SME Champion Awards Season 2.
Welcome back. The broader market still reading under some pressure. We have First Source, which has moved to the low point of trade. CG Power continues to reel under pressure. We have IIFL Finance, which has come in for some selling. Interglobe Aviation as well is at the low point of trade right now. You're watching us here live from the CNBC-TV18 Motilal Oswal newsroom. Let's get Mitesh Thakkar to tell you what to buy today or sell today for a reverse trade tomorrow. Mitesh.
I have STBT on Zomato with a stop at about 213.5 for a target of around 206. and an STVT on Aditya Birla Fashions with a stop at about 239.5 for targets around 233.
Okay, all right. Got it, Mitesh. Thank you very much for all the trades today, all the advice, and we will see you with the markets again tomorrow. We do have to take another very, very quick break, but where do we stand when it comes to women's leadership and progress in India? The close, the gender gap index uncovers key insights, while the Future Female Forward Charter sets the roadmap for real action. Be part of the movement. Tune in today, 5:30 p.m. onwards on CNBC-TV18. Welcome back. Seeing that sell-off continue on the screen, 1.7% down on the mid-cap index and about 0.5% down on the Nifty. We've got Anand Tandon joining us on the show this afternoon. Anand, thanks for joining in. I want to start with a specific question on IndusInd Bank. Today, the stock has been slammed, even more because of the bank-specific issue, which is the extension of the CEO. Mr. Katpalia gets only a one-year extension. What's your call on large banks overall in a market like this? And within that, where would you place IndusInd?
Generally, banks are relatively cheaper than the rest of the market and have perhaps the least threat in terms of the potential earnings growth. So that's a sector that one remains overweight in largely. IndusInd Bank is actually fairly cheap. It's barely, I think, trading at around 1.1 or 1 book value, depending on whether you use 1 year or 2 year forward. So from the point of view of valuation, it is quite cheap. There is no doubt that, as you mentioned, management changes will create a certain amount of strategy changes and therefore may affect the growth trajectory. But given where the valuations are, I think by and large, most of it is factored in.
So you would be a buy on IndusInd at these levels?
Well, I don't make recommendations, but as I said, from a portfolio perspective, A, I am bullish on banks, and 2, IndusInd is cheap.
Okay, all right. What about Zee Entertainment, Anand? That's the other big underperformer. After a while, you've seen the promoter entity come in there and buy some shares in the open market. They bought close to 27 lakh shares last week. And from there, the stock from around, I think, 9,800 rupees, it's at around 108 rupees. Valuation-wise, that's trading at around 10 times. That compares with the average of around mid-teens. And they have promised that margins will improve. Will you be bullish on this, or will you say that, no, it's eroded too much of wealth, you'd rather give it a skip?
Which company did you mention?
Zee Entertainment.
Well, yeah, I mean, it is cheap, definitely. The challenge in Zee has been the fact that there are governance issues that sustain. There are issues in the balance sheet which sustain. So there needs to be still a cleanup on the balance sheet. But given the fact that the industry has more or less become a single horse race now, there is a chance for another player also of some size to be able to garner some of the viewership. Zee has probably seen some of the worst period in the recent past. There is potentially, assuming everything else was normalized, it would have been a great place to buy. But as I said, you can't deal with corporate governance issues and balance sheet issues with any degree of certainty. So therefore, with that caveat, overall, in terms of just the numbers, it is relatively cheap.
All right, Anand, hang in there. Thank you so much for your insight. What we'll do is start wrapping up the market, and thereafter we will continue to have a conversation with you in our post-market show, Markets Forward itself. So all in all, a weakish day for the frontline indices, but a lot more for the broader markets. The Nifty ends about 100 points lower, with the broader markets a lot more down, almost 1.8% for the mid-cap index, giving up almost entirely the gains that it had made all of last week itself. The top Nifty losers, ONGC, Trent, IndusInd Bank, Bajaj Auto, Eicher Motors, some of the ones which managed to hold on into the green. We had a couple of these, FMCG names. HUL was up 2%, Infosys up 1%, Power Grid up around 3%. But the real pain was in the broader markets.
Absolutely. It's almost a 2% slide now as we're closing down. 900 points gone from the mid-cap index and a really poor advance decline ratio by the end of it. 361 Wealth Management, 8% lower. Triveni Turbine, 9%. JM Financial, you just go on and on naming. Neogen is down about 10%. Some of the smaller names like Dollar Industries, Smash, 10% lower. So yeah, it's been an extremely painful session all over again after 5 relatively decent trading sessions. Tough day. Well, the bell has gone 110 points lower on the Nifty is where the final tally stands. That's where we'll take your leave on closing bell, but stay tuned. All the market action continues. Up next is Markets Forward.